Welcome to TechPoutine.
And we're live. So we're back at Espace DPQ with the gang. The band is back together. We have a lot of topics. I think a pretty exciting or dreadful week, depending on how you look at the numbers. There's a lot going on in the industry, and I think it's pretty cool that we're recording today, Friday, May 30th. I think the main headline is, State of VC. There's been like 5 different reports covered in the Globe, Financial Post, the Americans Investing, State of VC. There's a lot of interesting different angles to take. I don't know, Eleanor, maybe you kick it off or talk about before recording about how you feel what's going on and what's shaking right now.
I feel like we're really at a good turning point, especially this week. First of all, the sun is out pretty much everywhere across Canada, which feels really good. It's conference season. A bunch of folks were in Vancouver for Web Summit. Apparently, the attendance was really strong. We were at the CVCA conference in Calgary. Great attendance, great energy from there. There's a Tech Week in Toronto coming up and Startup Fest in Montreal as well. And the Atlantic Venture Forum actually happening next week, I believe. So lots of things going on. At the same time, there's all these reports that come out that the trend is not super exciting when you read the reports cold and just look at the pure stats. But actually, John from RBCX has this great report that looks at where we are today compared to where the U.S. was 15 years ago and the previous cycles, all the way from the burst of the tech bubble to now. And where we are, at least my reading of the data, is that it's completely normal. Like we just went onto 7-8 years of growth in the industry at crazy high valuation, and the market did pull back. And there's not a lot of distribution because the liquidity market is not there. So the lack of capital and rounds getting done over the past, let's call it 6-8 quarters, is normal. And I think standing in my shoes as a VC, that's easy to say, it's a very exciting time then to deploy. And I am confident that we will have a new liquidity market, hard to know when, but the data shows that we're at the bottom of a cycle that will grow again with everything happening in AI. I'm sure a lot of capital would unlock and we'll see great companies being built and acquired.
It's interesting that you mentioned the US 15 years ago. And I know obviously this is a Canadian tech focused podcast, but that suggests to me that you think the state of affairs is different in the US, that we're not seeing the same thing in the US. Is that what you believe?
And again, I don't want to misquote John from RBCX. Maybe we should invite him on this podcast. He'll tell you what he sees in the data. But basically, what he shows in his presentation that I think makes a lot of sense is that we're still in the phase where just like our industry is getting institutionalized. We're still at the phase where we're organizing before. Think about a C to Series A company. We're not in Series B mode, and the US is. So we're seeing the same overall trend in Canada and the US, and obviously Canada at a much smaller scale in general. But I think the big difference is because the US ecosystem is much more mature, they see the swing down a bit less than us because there's that solid base of infrastructure and capital going around. There's been more recycling, there's bigger exit. So there's more distribution, even in a world where the distribution dollar code flowing back to VCs and LPs after an exit.
So could that explain why the stats are showing that there is more and more US investors coming to Canada because of the state of our cycle?
Yes and no. It's because there's less capital being deployed there. There's still much more dry powder in the US. With the exchange rate, like come lead a Series A in Canada, you get such a good deal.
Yeah.
And our founders, our tech talent are more and more connected with the rest of the world as well. So to me also that I don't initially see this as a bad thing. I think it's one of the many wake-up call Canadian VCs should have. But I think for the ecosystem, it's not a bad thing to see more folks being interested in Canada.
Yeah, definitely these reports tend to be a lagging indicator in terms of what's happening. I think we were talking a little bit about it offline. It definitely feels like the market's starting to curl back in terms of some of the deals that are happening. I think we need to remember as well, a lot of these reports are based off of data that is like CVCA data or funds investing. A lot of the angel money that's going into companies is typically not being recorded. And when I talk to founders, I hear people are starting to raise capital again.
Yeah.
The thing that I would be concerned about broadly for Canada is we are more of a conservative kind of investment community. And so we might be at interesting is not the right word, but tricky inflection point where the market's starting to curl back. But because we're more conservative, we might be lagging behind the U.S. investors who are going to jump in.
It's interesting that you say we're conservative, right? Because when you look at the data, it's clearly stating that there's not much happening at the seed stage. Whereas in the U.S., it sounds like they're still going hard and we're not. But yet there are funds out there that have all kinds of capital. How come they're not investing? How come they're not doing what they're supposed to do, which is investing at the seed stage? What do you think?
Maybe I'll tackle the question differently. I do agree with the dry capital piece. I'm not sure why, but many funds, and we're sitting at Espacito PQ, many funds do have dry capital. The way I look at it is like supply and demand. Like the best companies are raising.
Yeah.
And the CVCA and the Réseau Capital data that are showing like pretty dramatic declines in activity over the past 2 years are not capturing a key data point. Is if the founder is raising from a US VC, the US VC is not sharing their data back to the CVCA. They're not members.
Exactly.
So the data is not perfect from that perspective. So the best companies have options.
Yeah.
I think to your point, Eleanor, we do want international capital to flow in. I think it's good, but it's also the Americans are smart. There's the supply demand imbalance. They're like, hey, the great companies at a discount with the currency exchange.
And shred and things of that nature. And the other thing is too, I remember very vividly when the first question you would ask a founder is, oh, how's it going? How big is your team? And it was a badge of honor to say, oh, we're 20 people or 50 people. Now it's like, we're 2. And that's the badge of honor. So the cost is even lower than it's ever been, right, to build?
To that point, Ian, I think, and I could speak about this for hours, but the way the next generation of companies are being built is different than in the past.
That's what I mean. Yeah.
So maybe the way we talk about a pre-seed or seed round should completely change.
Right.
And maybe there's a ton of companies being built right now that just
and we don't know about it
because they don't need to.
Yeah.
This is exciting.
Wouldn't that be great though?
Yeah.
That'd be great because the companies could come out with a lot more maturity and more traction, less risk.
Yeah, I think in the Beta Kit article, Pablo from Mistral was talking about that. It's just a different time in terms of how people are building. I just want to clarify on the point that you made. I think I hear it a lot at events, and I hear mostly VCs have this talking point that the best companies are raising. Just want to, from what I'm seeing from kind of the founder community level, that is true. But I think what we should maybe be concerned about is the best companies are raising, and they're raising most of their capital from the US markets. And so as Canadians who want to have these companies stay in Canada and have ownership from Canadian investors,
10 years from now, it's not going to matter. We're going to be the 51st state anyways.
I was going to say, when I talk to founders, I always say it's raise the best terms, get the best investor. And if you get from the US, that's great. But if you abstract it at the national level, it's fucking horrible that this is happening. Like the first round where you open your capital to an external party, the best companies are being scooped up, right? And then what happens over time is the customer base and the capital bases in the US, they slowly get sucked away.
I think
we do need to have more bright sparks in market for sure to be able to counter this. And to the point of where you're saying the bottom end, I think we're talking about the optimism a little bit, is the data is also probably a few quarters behind, if you ask me. So I think
no doubt for sure. Yeah.
We've seen a lot in like the events that we organize or other people organize. You could see this next generation of people. And we actually saw Sylvain right before recording. He's like, hey, there's all these people I've never met. And that's great. It means because you're too old. It's all the next group of builders that are not waiting around, right? They're at it. So we will see it, but that's not captured in any market report.
Yeah, I was just going to say the reports and the press is typically behind. We were talking about it before. In my previous life in the hedge fund world, it was a known thing. It's like when the New York Times or whatever paper has on the headline, recession, that's the time to buy. And so
that's the time to what?
That's the time to buy. Yeah.
Yeah, and I think uncertainty usually slows down this industry. And we are now at a time where there's still a lot of geopolitical uncertainty, financial uncertainty. There's this massive change happening in technology. So both experienced founders and VCs were kind of waiting and see a bit out of the world. Like they're not that people are not building, but to go out and raise money, people were just waiting to make sure they were coming to market with the right narrative and the right focus. So I think to me it's just normal. But to your point, like I really see the activity pick up right now.
In our lifetime, like all of us, we've never seen this type of and uncertainty, insecurity for the Canadian
Yeah.
ecosystem or economy as we're going through now. So it's bound to have all kinds of impact, including building a company.
Yeah, I think it's a very specific time in history in terms of so much transformational change happening in the U.S. and then a Canadian election at the same time. And so I think you're absolutely right. People were on the sidelines just waiting to see how everything was going to, how the cards were going to fall. But now it seems like there is a little bit more stability and clarity in terms of things are not going to dramatically change. And I'm seeing it from the founders that I'm talking to. Pipelines are starting to fill up again. Business is starting to come back. People
Sales pipelines?
Sales pipelines. Because I think it's June tomorrow. And people are realizing, oh shit, half of the year is gone. We need to start moving on 2025. And we were in a wait and see mode for almost half of the year.
Eleanor and I were at Calgary this week for CVCA. I'd like to pick Eleanor's brain on what do you thought of the takeaway? For me, it was great because I got to meet all the institutionals and we're still fundraising. So it was like meet and greet and kissing the ring. But from your perspective, what did you think of the general mood, sentiment of the institutionals and the LPs there?
Overall, it was good. Like my main takeaway is that Calgary is like really on a roll. The data shows it. If you talk about Canada, like
sure.
Alberta is out there off the chart. We could feel that energy. I made amazing local early stage VCs there, amazing founders. The LPs are there. They're supportive. They're like, we're open for business.
There's
Come
money.
to Alberta. And there's a lot of private money just now dipping their toes into tech. So very bullish on Alberta altogether. And across Canada, I think LPs are like, they read the same reports that we do. They see it even much before the reports are out. I think there's some excitement around the industry, but again, I think the biggest worry is the lack of liquidity in the market. A lot of these funds have their own investors to report to, or some funds are evergreen. If it's private money, you're waiting to see your investment dollar invested into the asset class come back before you make brand new investments. So I think that's the second that the liquidity window opens, I think the industry will get a crazy boost, and question of knowing when. In terms of some thoughts I have on the industry, it felt like the industry is a bit divided on people that are like really doing everything around AI, changing their business model. I'm talking on the fund side. So really people who are deploying capital, were really investing in like only in AI native companies, like completely shifting. And folks who are still kind of waiting on the sideline or not like realizing yet maybe the wave that's coming, or at least not acting on it. And that made me a bit worried. It's an opportunity, it's a challenge, but as investors, because what I hear from the U.S. is that everyone's like going hard on AI and people are changing the way firms are built and so on. I didn't get that feeling that much from the conversation this week.
Yeah, it's interesting. I spent zero time in the content. Like I was saying, it was like all about fundraising. We talked to a lot of founders and I had a little bit of a sense. I met with a B2B SaaS company recently. And I was like, oh my God, like this is the past. This is not going to be the next the job of the VC specifically. You're looking for the big outlier, right? The big gain. This is like a 2015 idea. This is not, it's not of the age right now.
Things are evolving in the U.S. quite a bit. Did you guys see, we did not prep this before the call, but did you guys see what the General Catalyst did with Grammarly today? Or was it, I saw it today.
Yeah, I saw it. It was like the $1 billion. It was almost like
it's like a loan.
A loan based
on sales and marketing. Yeah. And they get a kickback based on the results.
That's a fund that's been like going around.
Pretty wild.
It's been building these, and there's a few funds like Vistura in Canada who do mostly debt and venture loans that are structured very smartly. I think that's the future. There's a bunch of US firms who are also doing P roll-ups of bookkeeping firms. And the venture is changing. I'm not sure what's the answer. And
it's almost like a guaranteed return investment, right?
No. So to your point, I think the venture is changing. And we've spoken about before the whole notion of seed trapping. And the earlier stage, I think is going to be okay because founders still need that initial kind of kick of capital. But what happens to the A, B, and C's, that's the jury is out. And then on the Grammarly thing, I think it's a cool headline. It reads well. But then we recently lived that through with Clearco here in Toronto.
Oh, yeah.
And I remember seeing their model. And I don't know the company, so I'm just really superficial knowledge of like they're financing paid search as a thing.
Yeah.
I know how paid
Meaning,
search
like,
works. It's like,
I
it's
guess
very
the
hard.
General Catalyst was doing
No, I'm talking
revenue
about
financing?
Clearco. I'm talking about
Clearco, yeah.
Okay.
So it's like they were financing performance marketing, which is
Okay.
similar to the Grammarly announcement from today. And I find that
It's actually referenced right in the announcement, or I saw many people talk about it. But to me, it's not like, I don't really have a position right now as whether or not it was a well-structured deal or not. What I think is interesting is there are new types of structures that are being explored. You know what I mean?
Yeah, I think
I've never seen anything like that before, and whether that works or not, I don't know. But it's fun or good to see that you see they're
last
looking at
time we
stuff.
spoke, there was a lot of news that came out. Maybe it was 2-3 weeks ago. There was a bunch of funds that were announcing that they were doing multi-stage and private equity and just really shifting their business models. I'm not tracking that much the venture world, but what's your opinions around that shift? And I know we talk a little bit about how you're reflecting on how AI can transform your fund. What's the overall sentiment just coming from that conference?
the headline, this is not from the conference, just listening to many podcasts. But it is a trend, is that you do have like this barbell that's happening. You have the true multi-stage, like the really big US funds in particular, 10 billion AUM. And their promise is, we'll raise your pre-seed or seed with us. We have infinite capital. We'll give you like an unfair advantage with like introductions to like the UAE or wherever in Hollywood. And that's a pretty compelling pitch. And it's almost like they invest in seed as a loss leader for their Bs and Cs.
Yeah.
And
The gateway.
Exactly. And then on the other side, you have specialized funds that are smaller, sub 500 in size, and they're very specific in what they do. Brightspark comes to mind, and I said, hey, we're really good, and specialized, and founders see the appeal of that kind of a fund. I think that's been the general trend. And if you're somewhere in the middle, I think it's challenging.
Yeah, and in terms of the business model, like we've seen, there's Sequoia changed their model a while. There's more and more funds are getting some license to be able to invest in other things than private companies. There was a big boom when crypto was out, for example, where a lot of these firms went, Andreessen was one of the first to move in that market. And I think it's just the real hardcore VC firms are often private firms, and we are entrepreneurs ourselves. And our job is not necessarily to do just VC. Our job is to create alpha for investor on innovation and tech. And again, if the overall way tech companies are built and financed is changing, then the model,
should
the
be
way
changing
to make
as well.
money will also change.
Yeah.
It's not entirely true. I attended one conference and it was on the notion of secondaries for GPs, because the issue everyone talks about, the IPO window being gone, and exits being more rare, is less M&A activity. And I think Chris from Inovia did a good post on this week too, talking about like this whole new market that's emerged because of funds need to have DPI. There's life cycles attached to funds. So what do you do with all these companies that you can't sell, your stake in them? There's been all these new specialized vehicles that have emerged. So maybe that's to answer your question, Gabriel, as to what's been more new and more on our radar is, hey, there's new ways to basically sell companies.
I don't think it's necessarily new, but I believe Inovia is one of the few funds in Canada that's multi-stage and can also do public investments as well. I think they have a team that's doing capital markets from
that being used to me. I don't know, but they are multi-stage for sure.
For sure, multi-stage.
They're the like going back to barbell. They're the one that comes to mind, at least in Canada, that closely resembles that. Like they have a Discover program, right? So with the financing funds, they have their venture program and they have growth. So they're really across. I'd be surprised if they do public markets though.
I think A16Z is doing public. I know there's a bunch of US funds that are doing it.
Sequoia too.
Sequoia too. And I saw one that's actually doing wealth management for their founders as well. They got licensed.
Oh, yes. Which one is that?
I think that's Lightspeed.
Yeah.
Announced recently.
That's really
they're doing that.
So it's interesting, like you said, people are looking for new ways to find alpha. And so that could be an interesting approach as well as offering that value add to their portfolio. And so it's interesting times.
What if we put a bunch of founders in a room, each gave them like a little bit of money and see what they can build? Wouldn't that be great?
That'd be interesting. Sounds like a bit familiar.
Yeah, exactly. Welcome to my joke.
I think, going back to the topic, I think it's pretty optimistic, I find. Is at least on my end, I spent the past 2.5, almost 3 years fundraising, and it's been really dreadful. But now I feel like we're finally passing that gap. And so I'm sure you're seeing it too a little bit on our year. And just on the VC side, I know we're talking a lot about VC this podcast, and we could have a therapy session too if you want. But it's like finally we're getting out of, please, starting to put liquidity back into the market.
Yeah. So we mentioned 2 big events that were happening recently. So there was the CVCA, but there was also Web Summit at the same time. So I know you guys were in Alberta. Ian and I weren't at Web Summit. Did you guys hear
I had
any news?
2 team members at the Web Summit, and only feedback I have is that it was like, we're so busy. There's so much things happening, and like we haven't talked to them yet because they're so busy. So I think it was a big success. I've seen a lot of folks like VC friends from the U.S. who also went out there. I think the fact that I was on the West Coast attracts probably a different crowd than what we have on this side of the country.
That is true.
I just saw I got the FOMO online as well.
Yeah,
and it's
I saw
it seems to
LinkedIn.
have been super well received, and especially I think considering it moved from Toronto there, it's been good. And with Collision being gone, in essence, very cool to see it pop up. And so it seems like West Coast is kicking butt these days. Like going back to the point about Alberta, I felt that I met a few founders while I was there, and like you could feel the builder energy. So going back to the optimism and like the reports, no one's waiting for reports to to build a company.
I haven't spent time in Alberta, but one thing I'd say the West Coast, I feel, has a little bit of an advantage of is I think naturally they're a little bit more comfortable with risk. I think it probably stems from a long history of investing in resources or
West Coast,
resources.
like U.S., Canada, or both?
Canada,
okay.
West Coast.
Okay, that's interesting.
Because I've met a lot of people from Calgary, and they reminded me a lot of people from Texas. And the people in Texas are very comfortable with risk because of the whole oil industry.
The abundance.
So it's a hits.
That is exactly the feeling I got speaking with folks in Calgary, is a bit of that, especially, and I think things I learned about Calgary and Alberta last week, this week again, it's a long week, is just because of the way oil and gas has to be extracted in Alberta, coming from sand is very different than how it's done in other places. So they had to build a ton of technology and IP and be really innovative and risk takers to really capture that resource here. And so that spirit kind of lives.
It's been there for a long time.
Exactly.
Coming from a different place, but interesting.
And I think in terms of Vancouver and BC, it's just a proximity to Seattle and San Francisco, that there's just more of that Silicon Valley mindset that's been ingrained there for a long time.
That's why I was asking the question whether we was talking about U.S. or Canada.
I think there's also a little bit of the remnants of the venture exchange that was in Vancouver as well. And so there's a lot of people, I noticed that there's a lot more people in Vancouver that are comfortable going public earlier than in the East Coast. I think it's because they just know a lot of people. There's a lot of people in the ecosystem in Vancouver that understands that path. Like in Toronto, Montreal, I don't hear a lot of people talking about going public at a small cap or a micro cap.
I think one of my takeaways was builder energy for sure, and also I went to this like emerging manager lunch thing that the CVCA organized. I met a bunch of folks from over there, and the funds are really small over there. Like
the funds are small.
Yeah. Oh, our fund is 5 million, 10 million, and it takes 2 years to raise. It's not like easier to raise. So it really spoke to me about people were really pressed. Wow, what's their fund size you're going after? And I'm like, it's okay. I don't know. And
how do those fund economics work? They're doing it part time.
It's smaller teams. It's 2
GPs.
1 or 2
GPs.
So really small teams, and like brilliant GPs, and it's just harder. There's less institutional capital there. So that was one of my takeaways. Going back to the disparity, supply demand. Okay, great companies, but here it's the VC is less developed overall. That was my takeaway, at least from Alberta specifically.
Yeah, we were touching on it before. It definitely is possible now. Everybody's talking about seed strapping and being super efficient with capital. It is very possible that the funds become smaller in size because companies potentially don't need as much money to get rolling and maybe don't need to raise money after that.
Yeah, and the teams on the firm, like inside the firms, don't have to be that big. Like probably right now at Brightspark, we're a 6 partner, 1 associate. Like it would have been impossible to do that a few years ago, but a lot of firms are going into that direction.
Because you're getting a lot of leverage from AI tools?
Yeah, exactly, because you can just automate a lot of the stuff we do.
Yeah, same. At Attain, we feel super powered. Like we have an engineering team of 2. They must be doing the work of 10 people. It's like after 20 years of building product, it's just the velocity is insane. It's crazy. Yeah. So it's really exciting. It's exciting times for sure.
It's a little disorienting too. There's so much going on.
It's
in a good
difficult.
way. Like
it's difficult to keep up with all of the innovation that's happening. It feels like there's something new every week. There's a lot of content being generated by AI, which is flooding our kind of mental load as well. And there's a lot of people who are very hyperbolic as well around what it can do. So it's tricky to figure out what's real from not real. not only in terms of the content and the actual information, but also in terms of the claims that people are making that they can do with AI. On my end, I'm seeing a lot of productivity that is real, that I know is real, but I for sure wouldn't do something and just use it out of the box, but it gets me like 90% of the way there in probably 10% of the time.
Maybe to switch gears, talk about like just maybe recent news and gossip and stuff going on. Like one thing that was
We're a gossip show now.
Did you see what he was wearing? Oh my God. One thing that was announced at CVCA was John's Lifetime Achievement Award, John Stokes. Because I have two people that worked with him very closely here, I'd like to hear a little bit from you guys, like how I was working with John, what you think of the award, deserved or not.
Yeah. I mean, I posted a little bit on LinkedIn, 100% deserved from my perspective. I'm definitely biased. What I said on LinkedIn is I wish other people could have seen what I got the chance to see. I feel very privileged to have worked with John. Everything from sitting in the investment committees and hearing him dissect and break down companies to just setting the vision to all of the Founder Fuel demo day speeches. It was just constant source of inspiration. I think that's how I would summarize working with John is he did such a great job inspiring people, and he would inspire people and get out of the way, but it's ironic that his family name is Stokes. He would stoke the fire. Sure.
I have a very long standing relationship with him. I've said it many times. It's like a big brother for me. Like when I came back from San Francisco after meeting Mark McLeod, I met with John. And I remember, and I shared some of this on my post on LinkedIn as well, but we were having coffee on Notre Dame. And I remember sitting there going, fuck, I need to work with this guy. I need to find a way to partner with this guy. And that led to Founder Fuel. And so I saw him as a colleague and as a partner. And I also saw him as an investor in Breathe Life. And I had a lot of different investors. And I think John brought that sort of, especially in his own evolution, like the early days of John were like when he was called the Simon Cowell of startups versus what he is today is very different. But true story, in Breathe Life, at one point we were struggling, like every startup struggles at times, and we were struggling. And we had a really big deal on the table. Like it was a multi-million-dollar deal annually. And we had a lot of hopes to get that deal. We were really counting on it. And we were in our quarterly strategy planning all at the office during COVID. So we were there, just us, no one else in the office. And Patrick gets the call. Patrick was our chief revenue officer. He gets a call from the potential client. And the call was, we're going to build internally instead. So the founders were like, fuck, we just lost it. And he just happened to call me for some reason at that very moment. So I pick up and he heard something in my voice. And I told him, we just got the call. We're going to get the deal. And he says, where are you right now? I said, we're all at the office. The five of us we're doing our quarterly planning. He said, I'll be there in 5 minutes. And 5 minutes later, he was there and he was in the office and he took all our laptops away. Let's sit and digest this and walk through what happened and walk through. It was just incredible how powerful that was for us and how reassuring that we're not going to lose the company because we lost this one deal. That's the type of person that he was for us. And so I'm really happy that he's been recognized for what he's done.
I heard those type of stories so often from founders. I had a interesting role at Real because I was part of the investment team, but I was a junior partner. And so I was very similar in age to a lot of the founders that we're investing in versus the other partners were a little bit older.
Like 10 years older.
10 years
Not that much older, but just a bit. Yeah.
So I think the founders thought of Ian and I more as peers versus the investors. And so we ended up becoming friends with a lot of the founders. And so many of them tell me that John really took the time to be there and I think the word that someone said on LinkedIn that I feel is really appropriate for John is he was very candid in his feedback.
And sometimes it's not fun.
Sometimes it's not fun. And that's what I really appreciated about John. And I struggled with this at the beginning of my kind of career in VC. I was sometimes concerned more about founders wanting to like me versus telling them what they needed to hear. And John didn't care. John, we would sit
straight up
with founders.
As you can imagine,
tell
for
them
those
what
who know
they
him.
need to hear. and then they would leave. And he would say, I don't care if they hate me. If they walk out of this room and they hate me and they go build a great company just to spite me, that's great. I just want them to be successful.
Yeah.
And I don't think people didn't get to see that side of John. They just saw the Simon Cowell side.
Yeah. And back then, remember the early days, like if you were a founder and you pitched to real guys and you didn't get money, you were fucked.
Yeah.
There was no other
There
capital.
was no other capital.
And then he would behave that way. So founders would be like, fuck that. But like the intent was right. The intent was positive.
It's amazing to be a VC, but it's also tough to be a VC because you say no to most people. And I know you're early in your journey on that, but just by the nature of saying no to a lot of people, there's a lot of people that end up resenting
Yeah,
you.
exactly.
And so
It's like a lot of people have a lot of reason not to like you.
Yeah.
But at least if you stay true to your core and you tell it how it is,
Yeah.
at least people will say, maybe I hate that girl, but at least, I got it how it is. It wasn't like a dance
Yeah.
of 6 months of
Yeah.
conversation that's
Mhm.
nowhere.
Yeah.
And I think you learn, right, over time as an entrepreneur, you want to hear it straight. It's like you're better to hear the bad news or the bad feedback that you don't want to hear because you've put so much blood, sweat, and tears into building something.
Yeah. An abstract of John as an entrepreneur, ironically, maybe for some, but like one of the things I actually enjoy is raising capital. And the reason that I enjoy raising capital is not for the badge of honor, raise this. It's because I pitch my business to anyone, like an investor who doesn't know my business. You learn so much about what's right, what's wrong, and what you need to be focused on. To me, and John was tremendously good at saying this. And when I pitched Bryce Park at the time, the same thing. And I'm sure when I pitch you eventually, it'll be the same thing.
Yeah.
But yeah, and he was very candid. Radical candor, like
Radical candor
sure.
was John for sure.
Yeah.
One small story about Real. When we were fundraising for Mission, Real had just finished deploying their last fund. And we pitched the guys and we thought, oh, maybe there's a way they can warehouse it and we can get it in. And they asked their LPA if they can do something. And in the end, they couldn't do a deal. And my co-founder said, let's bring them in with no money. And I was like, what? We're going to give them equity for no money? But they saw so much value in what Real brought as a partner and what they did for the ecosystem that my co-founder, Stefan, he was like, I wouldn't be here if it wasn't for Real. And so I'm happy to have them on the cap table, even if they don't give us money.
I didn't know that. It's a pretty
good
wild
story.
story.
It's strong.
Yeah.
I like that business model. Yeah.
I'm a roll too.
Hey, we're
Well, too.
talking about reinventing the investment model, right? There we go.
Yeah.
Like you could,
But I think
get a podcast.
we always like to say we're taking money from investors, not because of the money, but because of the value that you bring. There's no other measure of, I'll just give you equity. I just want you to be a partner.
Yeah.
Because if you're a partner in this company, our probability of success is going to go up.
Celebrity funds work like that a lot.
I can see you go
I'll give
there.
you like $50K for a $5 million value.
Yeah.
But I'll do an Instagram post about your brand.
I see you go into your partner meeting on Monday saying, I got an idea.
But yeah, I was really happy. But it's true. I met my co-founder from Mission at Notman House probably 7 years before we started the business together.
Yeah.
And
Stefan was always there.
Yeah, he was there.
I remember.
And yeah, he got exposed to the community. He had recent immigrant into Montreal, got exposed to the community because of Notman House and because of Real. And he would sit in, back in the days, we used to do the pitch preps in the cafe. And he was sitting there listening to John provide all of the feedback and all of the wisdom he would drop. And he was like, yeah, this is amazing value.
You know what? I'm sprinting, but I just realized some of the energy we felt in Calgary overall this week felt like Montreal 10 years ago.
Oh, really?
It's a fast
Earlier
growing, but
stage.
much earlier ecosystem. They have platform, they have House 831 or something like that, where people are meeting up in person, and
It's great.
it has a bit of that feel of Montreal, Notman House days. And I think we need that in Montreal, at least a V2 of these things. And it's a bit
sure,
what we're trying to
it's a
do
bit
here,
empty right now,
with
right?
North Star, but that feeling of bringing folks together and just creating some inspiration for next generation of founders is so important for Montreal right now.
Yeah, I think the good news is, as we've talked about, I think in the last pod, definitely see a new generation coming up and a new energy. And it's almost, they don't have the baggage of knowing what it was before. And so they just see a curve going in one direction, which is just up. And some of the OGs are like, oh, it went down and it's starting to come up. They're like, it's just going up and it's just getting better.
And that being said, like there's some of those OGs, like we saw Sylvain Cal earlier, who was pretty bullish. Like he's very optimistic. But others that we haven't talked about, but you and I have spent time with, some of the OGs like Jean-Nicolas Delage and Christian Jarre from Oster, like they're like, guys, like, it's starting to feel like we got to do something. We got to stoke it because there is that gap. And I think people are starting, like this initiative is one of them, TechPoutine, but like some of the people who were there the first time around, or at least when I was there, which is not the first time, but like in my lifetime was first time, are coming back and starting to do things, right? Like
And Sylvain, speaking of Sylvain, we ran into him just before the pod. He was saying it, we have a role to play. Part of it is stepping out of the way as well for the new generation. But I think also we can share all of the learning, enable it, share all of the learnings, share our resources, our connections, like all of that is super valuable. They shouldn't start at the ground floor.
Exactly.
They should build on top of what was built before. And I think we're seeing that to a certain extent.
Yeah, I think a pretty good way to maybe wrap this up today. And
if you open the floodgates with the John question. I could talk for 5 hours about John.
Yeah. So sneak peek, we're going to, I think, next episode, try and talk about Startup Fest. We won't say who will be the special guest, but yeah, lots of exciting stuff coming. And yeah, thanks today for today, guys.
Thanks everyone.
Thank you.
Bye.
Thank you for listening to TechPoutine. If you like the show, please subscribe or leave a review.